Hey everyone, it is ABJ here. Just wanted to recap today. Today was a very interesting day. We met all-time highs again. Once again, all-time highs. We hit it yesterday already. But today we actually had some contracts go 300% in the last 10 minutes of the day. Unfortunately, not all of us got that. I wasn't even trading today. I had some dentist work, but I saw some other people in the chat today do very well. That's awesome. But I just wanted to showcase how the market was when we opened and at what point you could have got in on these longs and just how much the data can tell us, right? I know from my discussions with other traders that seeing yesterday, bring up the chart here, everyone was like, oh my goodness, market is so high right now. We have so many gaps below us, right? Let me change these candles back to regular candles. You can see for yourself. Look at these gaps. Oh no. What is this? A fair value gap of some sort, right? How many times have we heard people say this? And now that's just something that we assume is going to be met. But with our data-driven approach and just seeing where value in the market is, we can see that there is no value in closing these gaps. Not today. It wasn't the case yesterday either. And right, this is one of those things. Most people I know, it's unfortunate that I see people trying to short the market every morning, trying to get this hero move to close this gap, close this gap. There's another large one right here, below 6,000, right? And there's even more. Look at this, right? But we know, because we're database traders here in QuantData, that there is less than 50% of the time that these gaps are closed, right? If you go back on the S&P 500 and you go all the way back to, let's just do the 20 years, you'll see that gaps are actually closed less than 50% of the time. And that's because positive drift. And at some point, you might think there's liquidity or something. There's no actual proof of that, but you might think that there's liquidity there. You might just come up with these fancy words. Fair value gap, of course. We hear that all the time. But we know, because we're database traders, there was no interest in this, in closing these at all. Whenever the doomers and the bears eventually say, oh, market's flushing, here we go, we're finally closing them. Yeah, that's like the one time they're right? But look at how many times they've missed these rallies. Since I think last week, 2 weeks ago, we've been saying buy the dip. We've been saying buy the dip here in QuantData because we see just the amount of calls flowing into the market. Before CPI, before PPI, before OPEX, the week prior, $14 billion worth of calls targeted for January 17. That is very peculiar. That's a lot of money for whales to throw away, right? Whales don't throw money away. They're not like us. I mean, we don't throw money away either, but for them especially, they're not going to throw $14 billion down the drain for no reason, unless they were pretty confident that CPI, PPI, and OPEX were gonna juice us upwards. And now, look at price now. We're seeing even further highs. Right. So recapping today, those of us with experience, right? This is a scenario that we see in the market more often than not, right? This is a large iron condor. So what is an iron condor? We'll see both sides just struggling. It is a position where dealers just want to keep us in the middle of it, in the range, right? So I want to showcase how we actually eventually push through. And you can actually use some of the data, some of the knowledge that we share here in the QuantData streams about the best times to trade, right? Best times to trade, we know, is first hour of the market. We're skipping it completely because you're overpaying for contracts if you're going long calls or long puts. And you can see right here that the trend changed as soon as we already did this move here. Give me 1 second. Let me do a vertical line. That is a terrible line. Give me 1 second. Let me do it again. 7:30 right here. Okay, so 7:30 is our optimal time to trade. Why 7:30? Because I'm West Coast, and West Coast is the best coast. We all know that. There's no dispute. So look at that right there, 7:30. Right, so we're skipping this entire session right here. We're not interested in this at all. And you can see that we have already started to move. Right, we're already moving upwards. Let me ignore these drawings for now. Give me a second here. So 7:30. So what are we looking at right here? So I'm going to show you what 7:30 looks like. This is 7:30. Right, we're starting to see a little bit of gamma shifting. Ooh, it looks a little scary, right? We still don't really want to enter calls yet. But if we start zooming forward, you'll actually start to see, look at that, just 30 minutes after. This is 8. So 8 a.m. We are looking at a small move. We're already at 60.90. 8 a.m. But you can see 60.90 is right here. And 61.10. That was actually the target for price. You guys see that shift right there? 8 a.m. Look at this deplete. Right? So at some point we can see these shorts. Yeah, they're giving up. They're like, okay, yeah, no more. We don't think the market is going to come down. There's too much pressure upwards. Let's shift it. And so gamma and delta showed us a pathway upwards, that there's both support now and an interest in 61.10. Right? That was at 8. So at this point, right, waiting for one side to win, you can have a confident trade. Right? So again, we're waiting for this first hour to go away, so we're not interested in overpaying for contracts. Right? I don't know about you guys, but I myself, I'm a very cheap Asian, so I'm definitely not interested in overpaying for the same thing. By this time here, out of the money contracts, you're looking at like right at 8, right? We're already at 8, and this it's already showing us. So at some point we get to 6100, it does get a little bit dicey, right? But I know that you guys know if we don't have more than 20 points, 20, 25 points to go, it's probably not in your best interest to trade options contract, because we will experience theta decay, right? You could trade shares though, futures. I know a hell of a lot of you guys like futures. Those are the other vehicles, the other instruments rather, that you can trade in this market, right? So going forward, when we hit 6100, it actually gave us clues. So 1030 actually gave us clues for 6115, I believe. That's some strong interest there. End of the day, probably it gave us more interest for 60. Yeah, there you go. I did see this. At some point it gave us some crazy move that it wanted some further. But all of this gamma and delta was just telling us that it's possible that, sorry, not possible, that it's more, the market's more inclined to go upside. That's the main thing I want to show you is. The main thing. And a data-driven trader would see this and go, hey, gamma and delta is upwards. Like, why would we short? We know here in QuantData, we never go against the gamma. Never go against the gamma. It's a loser's game if you go against the gamma. Because the gamma tells us where interest in the market is. Right, 6110 upwards. I know. So right here at the end, the last 15 minutes, it would have been really hard to read this based on gamma because there's no value left in the market. But you can kind of see 6110, 6115 didn't really peek its head that much. So I know some of you guys caught this because you guys were telling me, you guys were jumping for joy, telling me y'all gonna take me out for dinner or something. But I know that this here was 300% contracts on SPX, which is wild. But you should have already made money from this move here, from 730, from this at 730 all the way to, let's say, 8, because you can kind of see that the interest starts to slowly go away, right? You guys see 6060 contract. Earlier it was what, 200 million, something like that, right? We're always looking for this contraction. 200 something million, like where does it go? It has to go somewhere. This premium has to go somewhere. And where does it go? It goes to the side. Like, okay, we've given up. We now want upside. Right? And the same thing happened for delta. So these are the two main Greeks that we like to look at. And the shift on delta is actually crazier. Right? Because we know delta generally, when we're looking at delta, we actually want to see behind us. Because behind us tells us there's support. Right? This is generally what we see on delta side. Oh, sorry, down. Right? If you watched my previous videos, you would have seen this before. But yeah, delta is usually here. So this is showing us support. Sup. And this gamma shows us the target. Right? But in this case, for today, it showed us a target as well. So this is just ultra bullish. Right? Whenever we see, because delta, if this is support, then support's up here. So hopefully you guys caught that move. Hopefully you guys, it was an interesting day. I saw a lot of people in the chat saying that this is one of their first days trading alone without me on stream. And I was very impressed with the progress that you guys made. So yeah, hopefully you guys learned something. Hopefully you guys continue to work hard understanding data. But today's Iron Condor was just amazing stuff. And I know that there's going to be many more days like this because we see this again all the time. All right. And that's it. That's for today's showcase. Catch you guys later.